Management Accounting C370 Unit 4 Summary. According to CIM 2017, the problem of allocating production costs is one of the main issues for businesses. As CIM 2017 points out, full cost is equal to the total production cost, which is equal to total absorbed costs. When it comes to full or absorption costing, it is the allocation of all costs of a business to its products and services. In this case, three key things become important, that is cost assignation, cost allocation, and apportionment. We will be considering cost allocation in detail later. The key terms used with this cost system, which is absorption costing. First of all, the cost object, that is the item for which the cost is calculated. And consumable or flexible resource is an item whose cost depends on the amount of resource that is used, for example, plastic in a plastic factory. Then capacity related resource, that's an item whose cost depends on the amount of resource that is acquired, for example, salaries earned by employees. Direct cost, the cost that is uniquely attributable to a single cost object. Indirect cost or overheads, those are the costs that cannot be directly attributed to a single cost object. Cost pool, that is a production cost before allocated to products or services. Cost driver, a factor or event that has either a direct or indirect impact on the cost related to a specific activity. And considering about cost pools can be used to identify specific groups of expenses related to a single product. Considering about Collier 2015, direct-indirect classification is done based on the traceability of the cost to the cost object. So the classification of cost into direct and overheads varies with the products, the business, the organization, and the industry. When it comes to costs, we can categorize them as prime costs and overheads. Prime costs are mainly inclusive of direct labor, direct material, and direct other costs. Overheads are inclusive of production overheads and non-production overheads. Direct costs are nearly always variable costs, whereas indirect costs can be fixed or variable. When it comes to direct versus indirect materials, the direct materials are traceable to particular products through material issue documents, which we will be considering in detail later. Whereas when we consider direct versus indirect labor is traceable to products via a time recording system, whereas direct labor is identifiable from an instruction list or routine, which is a detailed list of all the steps required to produce a good or service. And indirect labor costs, like supervision, quality control, cleaning, etc., they do not appear in the routine. So, considering all of these aspects, full costing is beneficial for usage, but it has its own drawbacks too. According to Collier 2015, the key drawbacks of full costing include the key challenges: what cost should be considered, and a periodical adjustment between the management accounts for inventory and the value of an inventory account that appears in a firm's external financial statements need to be done. Also, the allocation base used is often regarded as arbitrary because there's no logical connection between the allocation base and the overhead costs. So the alternative to this is variable costing. Comparing the two approaches, variable costing is applied if only direct costs are used, whereas absorption costing is applied if there are both direct and overheads. When it comes to variable costing, it includes only the variable production cost, but absorption costing includes fixed costs also, and the fixed costs are charged to the income statement only when the products that use the fixed costs are sold. And when it comes to variable costing, the manager focus is on the contribution per unit, but in absorption costing, this managerial focus transfers the cost of all shared resources used in production to products or services. And also variable costing is mostly useful for short-term decision making. And the reported profit is not affected by the changes in the amount of inventories between financial reporting periods. However, absorption costing complies with the IAS too, and in this case we calculate something called the overhead absorption rate, which can be calculated as a business-wide rate or a cost-centered overhead rate. But there are several problems of doing these calculations. So in that case, variable costing avoids much of these overhead allocation problem, and it is useful for internal decision making. Looking closely at absorption costing, according to Collier 2015, cost center rate is more accurate than the business-wide rate. It attempts to differentiate between the different cost structures of the cost centers. And when fixed costs are a significant component of total production costs, the decisions made using a variable costing approach may be inaccurate because it ignores the differences that multiple products or services make on shared resources. That is why absorption cost becomes important in this case. Linking accounting concepts and standards to costing, IAS 2 states that a reasonable proportion of production overheads are to be allocated to products. So inventories should include direct overhead costs, indirect overhead costs, and admin overhead costs. Considering about management accounting and financial reporting, direct material purchases, other direct manufacturing costs, and manufacturing overhead costs tend to become inventoriable costs. And these purchased direct materials tend to become stored, and they are calculated as direct material inventory, which will be recorded in the balance sheet. When it comes to the other direct manufacturing cost and manufacturing overhead cost, the direct manufacturing costs that are incurred and the manufacturing overhead costs that are applied both together will be considered in the work in process inventory. So the direct materials inventory is also requisitioned in the work in process inventory. And when it's completed, it becomes finished goods inventory. All these inventories will be recorded in the balance sheet. Then this finished goods inventory will be sold, and the cost of selling it is known as the cost of goods sold, which will be stated in the income statement. So revenue minus the cost of goods sold will be equal to the gross profit or the gross margin. And then when we deduct costs like R&D, design, marketing, distribution, customer service costs, we get the operating income. Considering about the other costing systems used, some of them were introduced in the previous chapter. When it comes to process costing, according to CIM 2017, this is used with identical products, that is the products that do not differ in terms of production inputs, with the assumption that all the products use the same amount of resources. And also process costing is used for continuous production processes, and specifically process costing is used with continuous flow production, semi-continuous flow production, and batch production. When it comes to steps in process costing, first of all we determine the cost for each stage of the process, and then we assign costs in each stage to individual products. And an advanced version of the process costing system is the multi-stage system. So product costing systems in process-oriented plants measure the cost of converting raw materials in one time period in each process stage. So this kind of a system is known as the multi-stage process costing system. In this case, if the units in production are not finished at the end of a production period, partially completed units are converted into equivalent units of production mathematically. However, Atkinson et al. Criticizes the process costing system, stating that process costing is more complicated when production involves multiple departments and defective production. Considering the next alternative, which is job costing, CIM 2017 argues that it is used when costs of individual or specialized products should be calculated in order to assess product profitability, and it's mainly used when a firm's products or services differ in terms of production inputs. Direct costs are nearly always